Okay, well, hello everyone. On behalf of Marie-Brière and Sophia Ramos, it's a pleasure to welcome you to the third webinar organized by the ESSEC-Amundi Chair for the 2023 season. I would also like to thank Vanessa Thomas for the logistics. Over the last 2 years, the ESSEC-Amundi Chair has been organizing a series of webinars on a number of ESG-related issues. Today's webinar focuses on the impact of women's vote on boards on ESG issues. Over the past decade, there's been an increasing evidence that women are underrepresented on boards, in particular in the asset management industry. There's also evidence that women on boards behave differently than men by allocating more effort to monitoring, being less power-oriented, having better skills in human resources and sustainability, and being more concerned about workforce reductions. In this context, it is fair to ask whether gender differences between women and men are reflected in their voting behavior and the decision on ESG issues. The two papers in today's program provide new evidence on this topic. The first paper, presented by Alberta de GIULI from the ESCP Business School, explores the impact of women representation on the voting behavior of mutual funds by examining whether gender differences in investment teams of mutual funds translate into different voting behaviors. The second paper, presented by Edith GINGLINGER from the University of Dauphine, uses a natural experiment on board gender quota in France to examine how the presence of women on boards impact firms' ES performance. As usual, participants are encouraged to ask questions on the chat. They will be answered at the end of each presentation. I'm now turning over to Marie-Brière from the Amundi Investment Institute and co-editor chair, and I wish you a very good webinar. Marie?
Thank you very much, Jocelyn. So my name is Marie-Brière. I'm head of investor intelligence and academic partnerships at the Amundi Investment Institute, co-head of the ESSEC-Amundi chair. And it's my great pleasure to welcome you today, together with Jocelyn and Sophia, to our Amundi ESSEC webinar on women vote on boards on ESG. So board gender diversity has become a key concern for investors who are increasingly engaging and voting at annual general meetings on these issues. And over the last couple of years, there were notable progress in board gender diversity. The percentage of director seats held by women reached 24% in 2022 over the world, compared to 18% in 2018. France introduced a quota in 2021 and is now a leader in Europe, with 46% of directorship held by women in 2022. In June 2022, the European Union agreed to a new target to be achieved by June 2026 of 40% of non-executive directors' posts that should go to the underrepresented sex. But women are still underrepresented in boardrooms in many countries and also in specific industries. And even if, as Jocelyn mentioned, academic studies demonstrate the positive impact of women on board on performance and ESG policy, there is still progress to be made. Then the question is, can female fund managers help? And as we will see in Alberta's presentation, women-led fund managers, they tend to support more environmental and social proposals, and they can also support female candidates during board elections. So I'm very glad to welcome two prominent speakers, Alberta de GIULI and Edith GINGLINGER. And I would like to thank both of you for your participation. We're really happy that you can present at this seminar. And of course, also Sophia, Jocelyn, and Vanessa for a great partnership between ESSEC and Amundi. And thanks also to all of our colleagues and partners. I know you will be joining today to attend the conference. Thanks for being here, and I hope you will find it useful. Thank you.
Thank you very much, Marie. I guess the first presentation is by Alberta.
Can you see my slides and hear me?
Yes, we can, yeah.
Okay. Just let me put it on full screen. So first of all, thank you very much to Jocelyn, Marie, Sophia, and Vanessa for inviting me. It's a great pleasure and honor to discuss an interesting topic and with Edith, so an expert on the field. This paper and this topic has been analyzed together with Alexandre Garel from Audencia and Arthur Romec from Toulouse Business School. So let me take a step back and trivially try to understand why am I looking at mutual funds vote. This might seem very niche or maybe uninteresting for understanding, how and if women can actually change companies. Well, I was recently attending and presenting at the European Finance Association meeting in Amsterdam, and there was a panel of made up of 3 Nobel Prize winners, Hart, Armstrong, and Milgram. And there were several questions, and among the question that basically was the most, I think, interesting one and controversial one is how finance can actually address environmental issue and climate change. Interestingly, this was one of the few answers where none of the Nobel Prize winners had one single way to address it. So one of the Nobel Prize winner said, well, it's the government that should impose regulation and change firms. The second person said, well, the change needs to come from inside. And when I say inside, I mean shareholder vote. So it should be the shareholder understand that the future of firms depends also on environmental and social issues. And so from the inside, vote to change the firm. And the third one actually said, it's too complicated. This is a too complicated question to answer. That was actually a very easy way of asking the question. But you understand that studying how so the shareholder changed the firms, it's an important way of addressing the issue, such as environmental and social issues. All right. So when I say shareholders, exactly how can those shareholders change firms? So one way is basically the old way would be to sell their shares. The second one is to negotiate behind the scene. And the third one instead is the vote, the voice. And this channel has been increasing in the recent years, at least in the last 10 years. And more firms have witnessed an increase in shareholders' proposals, so proposals that are put to vote, especially in the realm of environmental and social proposals. Now, while do proposals actually matter before getting into how women vote on those proposals? And while the support a few years ago was quite low, there is an increased voting support, especially for environmental and social issues. So you see that starting from the 2000s, the percentage of shareholders that vote for has strongly increased from a 6% to a 30%. Now, you might still question whether a 30% vote for an environmental or social proposal might change the company. And the answer is yes, in the sense that although most of those proposals are non-binding, so even when they pass, the management is not supposed to change the policies of those firms, yet research tells us that when there is enough support, when there's enough pressure from shareholders, then the managers react. So even a 30% voting support can push the management to take into account those environmental and social issues, the voice of the shareholders. Now, so research tells us that, again, getting voting support can increase how management perceive, but it's less it's less trivial to understand why, and if mutual funds who are big players, think about BlackRock, think about Vanguard, can vote in those issues. So on one hand, this is an important channel because firms face more and more environmental and social risk. On the other hand, a myopic view from mutual funds could be to vote against those shareholder proposals. Because let me just remind you that shareholder proposals, when they are put up to vote, the management is always against, i.e., if all the negotiation behind the scene have failed, then those proposals are put up to vote, and hence it means that the management is against, basically. So voting for an environmental or a shareholder proposal means voting against the management. And the myopic view from the mutual funds would be to just vote against, to basically go in line with the management. So there are different kinds of reasons, drivers of mutual fund voting. One is executive connection. For example, if firms have the same connection, business tie. When I talk about executive connection, I mean that both the firms and the mutual funds, they have some people in common. A driver of the mutual fund vote is proxy advisors. So you can think of the most known proxy advisor is ISS. So these are firms that basically give guidelines to how shareholders should vote. Of course, these can be guidelines that tend to be general for some topics and more specific for certain firms. Funds ideology has also been proven to be a driver of a mutual fund vote, in the sense that some funds are more yes-oriented than other ones. And there's a difference between active and passive funds. So active funds tend to be, in a way, more engaging than passive funds when it comes to shareholder votes. I've already discussed about management myopia, but another topic is that is really specific to environmental and social issue is basically future risk that firms face. More and more managers understand that firms might face environmental and social issue. How do we know this? Because especially for environmental issues, we hear them talking in a conference call, analyst presentations, a presentation to analysts. Then we see that they mention environmental issue as a main problem that the firm might face in the future. And so the research has shown that when there's a lot of mutual funds that vote for a certain proposals, when this proposal is not implemented by the management, then in the future, those risks, they do materialize. So these are not just fears of the mutual funds and the shareholders. In fact, firms then they face risk. Of course, mutual funds are not alone. Most of the time they belong to a family. If you think about BlackRock is a family of funds. Then there is also the fact that BlackRock can give general guidelines, but nonetheless, specific funds can decide on the vote. Now, so far, hopefully, I've convinced you that indeed, both academia and professionals have realized that there are strong changes from the inside that come from shareholder vote. And specifically, that mutual fund managers, which I remind you represent more than 25% of the shareholder base, so they are a strong voice, they can change the firms. Now, the question is that why now focusing on women? The first thing is that they are now growing in the recent years. Looking at a paper published in 2009, Alexandra Nuenzi has shown that, Nissen Nuenzi has shown that 9% of the mutual funds that are managed by women. I'll get to the specific definition. Today, they are 15%. So this is a fraction that is growing. So women having more and more voice on mutual funds. What research would tell you that in general and on average, in the population, women are different from men, specifically in 2 dimensions. The first one is risk aversion. So women have been proven to be more risk averse compared to men. The second one is that women tend to have more pro-social behavior than men. The picture becomes slightly more complicated when we look at the boardroom. So then I think Edith will guide us into these interesting topics, because indeed there is self-selection. So only certain women will get to top positions. It becomes even more blurred when we look at women in finance. There's a very interesting paper by Renee Adams and Raghunathan about the bank crisis of 2009. It's called Lehman Sisters. And it basically shows that women in finance are as risk seekers as men. This, of course, it's because self-selection for in certain careers that maybe might be perceived as more male-oriented or more risky for the average woman. So here it becomes a non-trivial question. On one hand, how women can affect the voting, given that they are not like the general population, and given that more and more, if they manage a fund, they can push firms to change from the inside. All right. So as I said, so if we want to understand how women-led mutual funds change company, and if they change company, if they vote in a different way of men, then I need to define these women-led mutual funds. So the way we define is that at least 50% of the management team is indeed composed by women. So if we use this definition, we actually have 50% of our funds that are led by women. Why do we choose it 50%? We wanted to have somehow that women have enough voice to in the management team. Notice that in a management on the mutual funds, there is no leader, or at least not that we are aware of. So it's a pool of people that, of course, can vary. In the past, there were more funds that are single managed. Now, more and more, those funds are managed by more than a person. So, for example, in our sample, only 26% are managed by only one person, and the rest, you can see the percentage: 29% by 2 managers, and then 18% by 3, 9% by 4 managers, and then like almost 7% are with 5 managers. So, in any case, these are small teams. So why do we think this is a good way of splitting, of defining? Well, women are at least have a voice because they represent 50%, and then it gives us enough fund variation. What do we mean by that? So just to, before jumping into our model, let me remind you, we use 2 very standard data sets. This is the ISS voting analytics. We obtain data from the manager from Morningstar, and then we split the ES proposal based on a common definition. We come up with 1 million of shareholder proposals, and then I'm going to talk about this later, 9 million on management proposal. The time period that we analyze, 2003, 2018. All right, before we jump in out of the vote, the first question that might come to your mind is, are those funds different? Maybe those funds are different. The ones that hire women or are joined by women are different from the ones that are joined by men. So in this analysis, what we show is that basically the funds that are led by women are not different from the ones that are led by men in terms of tenures, experience. The only variable that come out to our significant in our analysis is basically the team size. Of course, there are yet not enough women in our sample, in general in finance, and so this is negatively related to the probability that this fund is actually led by women. All the other variables, whether they have different degrees or like a specific type of degrees, are not different from women and men-led mutual funds. This is actually interesting, given that we might think that women maybe need to be more educated than men to reach certain position, or they might have a different education to reach the same position. So it is not the case. Women and men-led mutual funds, they don't seem to differ neither in terms of performance, nor in terms of skills. So the way we analyze and the way we measure the effect of women-led mutual funds is by having a model where on our left-hand side, we have whether these funds vote or not for the proposal, and on the right-hand side, whether these funds is led by women. We use a dummy variable to vote for on the left-hand side, and then we use a bunch of control, team size, tenure, and experience. Now, we also use a bunch of fixed effects. So what are we doing in practice? We are looking at the same proposal in the same firm, and we compare how men and women-led mutual funds vote on the same proposal in the same year in the same firm. So all our co-founding effects are basically captured by those fixed effects. All right. So when we try to understand what is the effect then on those votes, we first use on the first column, you see that we're trying to understand what is the effect on governance proposal. We see that men and women-led mutual funds vote exactly in the same way when it comes to governance proposals. Instead, when we look at environmental and social proposal, we see that indeed women-led mutual funds vote more for environmental and social proposals. When we compare those and we put together, for example, in column 3, both environmental, and social, and governance proposal, you can see the interaction. Indeed, so women-led mutual funds vote more for environmental proposals, and in column 4 and in column 5, we split the two type of proposal. So it means that women are more prone to vote for both environmental and social, so in both realms. This is not only a significant effect, but it's also quite big in magnitude. These women-led funds are more willing to vote for environmental and social proposal, at least 20% more than men-led mutual funds. So of course, there is a huge problem of, you might think there is a huge problem of selection bias. If women, maybe they are more risk averse, or they care more about the environment, they might self-select themselves into more environmental and social funds. So we try to address this issue, and we exclude from our sample funds whose name contains the word environmental and social. This is quite standard in the literature, and you can see the results in column 1. We also exclude funds whose ownership, which is measured by a standard measure provided by Morningstar, a rating called GLOBE, and we exclude funds that own only environmental or mainly environmental and social firms. We also look at the historical vote of those funds. So it could be that women join funds that maybe they own, let's say, non-ES stocks or like dirty stock, for example, oil, but then they try to change those firms from inside. So we exclude funds whose voting behavior in the past 5 years was above the top quintile or more than 50% for those environmental and social proposals. And we basically show that no matter the funds that we actually exclude, the effect of women-led mutual funds is always positive and significant. We also try to exclude, as I mentioned before, the effect of the family, as it could be, for example, that BlackRock tells to all their funds that they need to vote for environmental and social proposal. And so in order to address this issue, we control for family year fixed effect. And by doing this, we try to understand whether the family can actually impose those policies. It is not the case, because even controlling for for family year fixed effect, the women-led mutual funds is still positive and significant. So one of the things that we realized at a certain point, and remember I started with this question, was, okay, women are different from the general population for 2 dimensions. One is the risk aversion, and the other one is the prosocial behavior. Now, we have realized that indeed, even when it comes to mutual funds, those women are still different from men because they vote more for environmental and social. Our question is it due to risk aversion or is it due to prosocial behavior? Now, of course, this is extremely difficult to test because we only see the exposed voting behavior. But we try to run a battery of tests to try to disentangle the 2 channels. So the first one is basically to see if the women use one-size-fits-all voting behavior. What do I mean? If a women-led mutual funds always vote for environmental social proposal in most of the firms in the last 5 years, then it means that it's a prosocial behavior. They do believe that those ES policies are important. If instead it was a risk aversion, then this would have changed according to the specific firm. Indeed, we see that when we pool the voting for all proposals, there is no difference between women and led mutual funds. It means that those funds, they vote according to the specific firm. This is still true when we focus on governance proposal. So it means that both men and women, they choose how to vote according to the specific firm. Instead, when we focus on environmental and social proposal, then we can see that those women, they always vote for. So, I mean, this is supports the explanation that women always care, so a more pro-social behavior. To complete the puzzle, we said we take a different approach, and we said there are. It might be the case. I remember when I discussed at the beginning that if there is if there is a strong support from mutual funds, from other mutual funds, this means this predicts future risk of firms. It means that if most of the mutual funds in a firm vote for a certain proposal, this could predict in the future that the firm might face a certain risk. I'm talking all funds, both women-led and men-led. So what we do, we split the sample into firms and proposal whose the median support is whose support is below the median, and proposal whose support is above the median. Now, if it was a risk aversion explanation, then we would see basically a strong support for a proposal whose voting support is above the median, and the lower support for proposal whose support is below the median. For a prosocial behavior explanation, this would not change. No matter how the other funds vote, women-led mutual funds should vote for those proposals. Now here we can see, if you look at column 1 and 2 of my regression, then you can see that indeed women-led mutual funds, they vote for those proposals in any case, although slightly more when there's a higher support. So even the second approach to our problem shows that indeed this is more pro-social behavior than risk aversion. Then we try to understand and look specifically of environmental policies. And we look at firms that mention climate change, climate issue in their conference call. In column 3, we look at firms, and we only look at firms where the management mention climate risk exposure, while in column 4, we focus on firms where there's no mention of climate change. We would expect, given that there is a risk of climate change, if it was a risk aversion story, that indeed women will vote more in the first case and not in the second case. Indeed, once again, we show that the voting behavior, no matter if you focus on firm that face high risk and firm that face low risk, the voting behavior is very similar. Finally, we focus on disclosure proposals. So what do you mean when proposal, the item is not taking action, but it's mainly disclosure? If there is pollution, for example, or a certain policy. And on the other hand, this is column 5, and in column 6, we focus on proposals that do not involve disclosure, but they are, for example, actions. So starting using clean energy, for example, or cutting pollution. So disclosure proposals are more related to risk because, of course, whenever the firm discloses more, of course, this implies a high risk compared to no disclosure. So once again, if the channel through which women-led fund vote for environmental and social proposal was risk aversion, we would expect a stronger effect in column 5, i.e. in disclosure proposal, than in column 6 when there is no disclosure. And indeed, we see no difference. So all in all those tests that I've presented so far, it shows the following thing, that women-led mutual funds, they vote for this environmental and social proposal for pro-social behavior, not because they are more risk averse. Now, so far, hopefully I've convinced you that our results indeed shows that women are different from men and they have more pro-social behavior when it comes to shareholder proposals. Now, let me take a slight detour and discuss management proposals. So what are those proposals? So those proposals are proposals put up by managers, and in specific, I'm showing you director election. So why director election? We wanted to test whether mutual fund managers that are led by women are able to increase the women on the board, the director on the board of the firm. Okay, if we want to expand the reason of the shareholder proposal, and if we believe that indeed those women push for more environmental and social improvement, then we would expect, again, when it comes to election of directors that are put up by management, then they would indeed vote for increase in women representation on boards of firms. In this case, of course, there's no opposition with the management because the proposal is put up by the management. And you can see that if we take the full sample of firms, there's no difference between women-led mutual funds and men-led mutual funds when it comes to pushing a woman director to become the new director of the board. Now, the picture becomes slightly different when we split firms, so company, between firms where there's low gender diversity, we look at the mean, and high board gender diversity. So in this case, we see that indeed when the women in the board of firms are low, then this is when mutual funds led by women try to increase the percentage of women on that board. So as for the shareholder proposals, also for the management proposals, we see that women try to improve the environmental and social issues of firms. Now, we thought long and hard about an issue. So let me go back to the previous slides. One alternative explanation to these results could be the following. In-group bias. I'm a woman, so I somehow see the other woman as more close to what I do and what I am. And then this is why I push so that that woman becomes the new director. Not because I believe in more diversity, but purely because that woman, because it's another woman, is closer to what I am. So this explanation is not supported by the data, because if it was the case, we should see this in-group bias both in firms where there is low board gender diversity and high board gender diversity. Instead, we see that this effect is only for low board gender diversity. So why am I raising then this issue again? Because we question ourselves. Remember that I started this conversation said that in case of shareholder votes, voting for a shareholder proposal is basically voting against the management. So what happened when on the other side, so when the management, the CEO of the firm is actually a woman? So which force will be stronger? The fact that I want to change this firm and make it more environmental and social, or the fact that on the other side, there is a woman and hence I don't want to go against the manager, against her. So we try to test which one is the stronger force. And indeed, we see that when it comes to all proposal in general or governance proposal, you can see that whether the CEO is a woman or a man, it matters in the following way. I find this very interesting. So in governance proposal, where if you remember at the beginning, we see no effect of women-led mutual funds. In this case, we see a negative and significant effect. It means that if on the other side there is a woman, the women-led mutual fund is less willing to vote for a governance proposals. And remember that at the beginning we find no effect. On the other hand, when it comes to environmental and social proposal, you can see that indeed the effect of women-led mutual funds is still positive, significant. It means that the belief that those environmental and social issues is stronger than the in-group bias. So no matter if on the other side, if the manager is a man or a woman, I would always, as a mutual fund led by women, vote for environmental and social proposals. So let me conclude. Hopefully, I've convinced you that on one hand, voice is an important way of changing firms. Then two, women in mutual funds are growing. So the representation is growing in the recent years. That this representation has an effect on votes and on specifically on the vote related to environmental and social issue. And this is mainly due to their pro-social behavior. So not for the risk aversion, but their pro-social behavior. And so I think this is very important if we look at the long-term perspective, both in terms of environmental and social issue and on diversity on the board. And then Edith will tell you then having diversity of the board will also lead to other interesting facts. Then it matters when it comes to voting behavior. And I think this is it for me.
Well, thank you very much, Alberta. Thank you very much for this very nice presentation. If you have questions in the audience, you can ask them or you can put them on the chat. Maybe I can start with one question, Alberta. I was just wondering, so you're looking at the behavior women-led fund, mutual funds on shareholder proposals. Is it possible, maybe you've looked at that, is it possible that their vote also depends on who's submitting these proposals? Are they submitted by women-led mutual funds or not? And do they behave differently depending on who's submitting them?
Actually, this is a very interesting question. First of all, there are very few mutual funds that submit proposals. So most of this proposal is a teeny tiny fraction. Most of those proposals are indeed submitted by individuals, unions, religious groups. But we have not looked into who submits those proposals, but that's actually a very interesting question. Yeah, definitely.
Okay. Someone else, another question?
I have a question, yeah. So one of the key points is the identification of the gender, right? That you rely on names, which in the US can be a little bit more tricky than in other countries. So do you make any kind of sensitivity analysis for this identification of the gender of portfolio managers?
Actually, we don't think we have such an issue. We are quite able to measure all the gender of those mutual fund managers. There's only a teeny tiny fraction where we cannot really assess whether the person is a man or woman. We exclude this fraction. But to be honest, no, we don't face this issue. Yeah. Also because there's no abbreviation, we have the full name, and so we can understand whether it's a woman or a man.
Okay. And other thing, I mean, I don't know exactly, but sometimes you just have team managed, you don't have the name, or do you have for all team managed all the composition of the team?
So I know what you're referring to. I think in the past, the data set were worse. Now we can actually assess most of the mutual funds. We can assess the entire team of those funds. So we don't have such an issue. Yeah.
Okay.
I have a question on the chat for you, Alberta. So it says many director elections are just routine. Why not focus on only contentious elections?
So no, just let remember what are the director election. So it is true that most director election, the voting support is very high. I mean, I'm talking about above 94%. Contentions in the realm of boards, it's really very few proposals. So I'm not sure that if focusing on those proposals makes sense, given that again the support is extremely high. Yeah.
I just want to add one technical question. In your regression analysis, I mean, your dependent variable is a dummy variable. You vote for or against. But I see you use OLS regression to estimate your your model. Is there a reason why you do that, or did you verify with a probit or logit model, or because you can be out of the bounds? I mean,
we use OLS because I think it's quite standard in the literature when there are a lot of fixed effect. Because remember, we have fund fixed effect and proposal fixed effect. And so when we have all those fixed effects, it's pretty standard to run OLS. So I hear your concern, but we thought about it, but definitely too many fixed effects.
Okay, that's fine. I understand. Other questions? Okay, well, thank you very much, Alberta. Very nice presentation, very interesting.
There's a question.
Yeah, I have a small question. Did you have some information on women characteristics? Do you know if they are old, young, or other characteristics of women?
So we actually not many characteristics. We have the average age and average tenure of the team, not the specific age, but this is worth understanding actually. Yeah, that's a very good question. Thanks.
Okay, any other question?
Yeah, sorry, I have a question.
Yes.
Hi, Alberta. Actually in the EFA conference, Tao Li, Tao Li is one of the best experts on voting, right? He
was actually the chairman of my session. Yes.
Yeah, exactly. He has at least 3 papers on voting, right? 3 top journal papers on voting. I remember he asked a question about several times. I mean, also we'll have some private conversation. He said that in some fund, at least I don't know how many percentage, especially big fund, usually there is a governance committee. So government's committee play a lot of very big role in this voting decision. So, right, so I think there are some ways to address this, but how do you address this?
So we actually, this is why I was raising the problem of family. And when I was mentioning that we control for family year fixed effect, we are actually exactly capturing if there are general guidelines from a family point of view. I mean, of course, when I say family, it means if there is a governance, a board that gives direction to all firms. That's exactly, what I was talking about in the analysis of family and family effects.
Yeah, but still, talking about voting guidelines, but still, this committee, governance committee has lots of power in this voting process. I mean, I will send an email. I have several ways to address this. For example, you can. I mean, there's until 3 ways. For example, you can run regulation. Perhaps I'm not sure until the family level, but use the family level female ratio. I don't know. Could be.
But most of the things are indeed captured. Again, by this fixed effect. I mean, we can discuss. I think I'm going to leave the floor to Edith right time. But I think most of those issues are indeed captured those things. But let's discuss, I think, privately so that we can leave the floor to Edith.
Yes. Okay, thank you.
Okay, thank you very much. So next paper by Edith GINGLINGER from Université Paris-Dauphine.
Thank you. Jocelyn, Sophia, for the invitation. It's a great pleasure to present this paper, and it's also a great pleasure to share the webinar with Alberta. So our question. So the impact of women directors on ES performance, evidence from board gender quotas, and the paper is co-authored by Caroline Raskov. So I have an issue of I will try again because it doesn't work. So our motivation we know that environmental and social issues are increasingly important for investors. There are more and more investors that are signatories of the principles of responsible investment. We have a large fraction of global assets under management that are oriented towards ES performance. On the bondholder side, we also have several credit rating agencies that acquired extra financial rating agency. So what are the channels to increase ES performance? So of course, we have just had a key channel that Alberta presented, and these are the shareholder resolution at the general meetings and the votes of mutual funds. So of course, investors can also directly engage behind the scene with management. They can require ES criteria in executive compensation. And the last way to enhance ES performance is to appoint directors who are ES oriented. And in fact, when we look at this survey, we see that ESG issues are under-discussed in the boardroom, and so probably one of the explanations is that directors may not have enough interest in these issues. So the second point is that, as we already discussed for mutual funds, women are more ES oriented than men, and they were able to acquire much more experience in ES issues than men. They were sort of front runners in ES issues because they were interested in these fields, and so they were able to take jobs in this area and to acquire expertise in environmental and social issues. And they did it earlier than men and more frequently too. So when we look more specifically to directors, so Price had several surveys of corporate directors. So when they ask the questions, do you see the financial value of ESG? We have 62% of female directors who agree that ESG issues have a financial impact, and only 45% of male directors. When we look at the fact of being supportive of investor focus on environmental issues, we have also many more women that are concerned, 64% versus 33%. And in a more recent survey, they ask questions about climate risk, and again, female directors are much more concerned by climate risk than male directors. So what are we doing in this paper? So our questions: can the board composition improve firms' ES performance? And so we look at a specific case of women on boards. Of course, we have a big endogeneity issue when we look at women on boards, because on the one hand, ES-friendly firms will elect women directors much more frequently. And on the other side, women may prefer to work in ES-oriented firms and so self-select in these ES-oriented firms. For that reason, we use the implementation of the board gender quota in France as a natural experiment. Because due to gender quota, firm had to hire women after the quota implementation. So it wasn't a choice, they hadn't choice. And we will explore two channels through which women on boards may have an impact on ES performance. The first one is the board structure, and especially ES committees, but also other committees. And the second one is the women past experience that is linked to ES issues. So just to sum up our findings in a nutshell. So what we find in this paper is that after the introduction of the gender quota, French firms increased their environmental and social performance. Women on board have a positive impact on ES performance, especially when they represent a critical mass on the board, because then they will really have an impact. We will see that in details afterwards. And the quota made this possible. And for the channel explaining our results, so on the board structure questions, we find that after the quota, firms have more frequently ES committees, that female directors are more likely to sit on this committee and also to chair it. And overall, female directors had much more power on board after quota. And on the second channel, for the past ES experience, we find that women have more often ES experience and for a longer period. And so gender quota really bring missing ES skills to the board. So let's come back to the literature. So we know that ES policies are relevant for firm value. So this question is not only a question of diversity, it's also a question of value. ES policy can enhance firm values through two main channels. So through channels that improve firm value directly, for example, because they may reduce the firm's risk, they may offer better access to financing, they may offer higher resilience during crisis periods, increase the number of analysts, or lead to higher post-acquisitions returns. So that's the first channel to enhance value. But we have also a potential increase of value through stakeholders, because if the firm is better able to meet stakeholders' expectations, then we may also have an impact on value. And so several papers show that indeed we have customers that ask for more ES policies, employees or suppliers and these policies have an impact on firm value. Second literature areas that is really relevant for our study, female directors are more likely, and we already listed these papers in the Alberta paper. Sorry, Alberta, we didn't coordinate before the presentation, but of course, female directors are more likely to be benevolent, universally concerned, less power-oriented, have skills in human resources, appear to act more ethically than men, to elicit more trust, confidence, greater concern over climate change. And we also have some papers showing that women directors increase philanthropic contributions. We have also some papers showing that gender diversity has an impact on ES performance with several dimensions. Use more renewable energy when you have more diversity on boards, less frequently sued for environmental infringements or reduce carbon emissions, especially after the Paris agreement, but these papers do not use a natural experiment, so we are still concerned with the endogeneity issue that we mentioned earlier. So what we do in this paper, so we look at the board gender quota in France with a diff, so we compare France to a control group. And so as I mentioned before, the effect on ES performance, on board structure, and the impact of director characteristics. So first of all, gender board quota in France. So the law has been adopted in January 2011. However, it has been discussed earlier. The first reading of the law at the French Assemblée Nationale was in January 2010, so 1 year before. And in fact, it was a law that all political parties agreed with, in the sense that right-oriented or left-oriented parties agreed on this law. So that means that, in fact, everyone knew from the beginning that this law probably most probably will be adopted. So for that reason, we neutralized 2010, because in fact, firms could already start hiring women because they knew that they had to do it once the law, after adoption of the law, that was quite certain. And so the law planned two thresholds. The first threshold in 2014, 20% of women on boards, and the second one in 2017, 40% of women on board. However, the real shock was on the first threshold. For the firm, they had between 2010 and 2014 higher women to reach the 20% threshold. So the shock was really around the implementation of the law and not later. So as I told before, we use, in this paper, we use a difference in differences approach. So we have on the left-hand side ES scores, and on the right side, we have the treated post-quota interaction. And so we have also firm level control variables. We have year and fixed and firm fixed effect. And then the treated group is the French firm sample. And we compare these firms before and after the gender quota implementation, and we compare them to the control group, so before and after. So the control group is one of the important questions, of course. We tried several control groups. We started with Germany, because Germany hadn't, at the time of the French quota, hadn't a quota. They implemented a quota of 30%, but only in 2016 and only for the 100 largest listed companies. But at the same time, there were some private initiatives to increase gender diversity. And also, the problem is that Germany has dual board structure for all firms, and they have employees on boards, 50% for the largest firms and 1/3 for the other firms, which was somewhat non-comparable to French boards. So the results were not that different when we used Germany as a control group, but we preferred, for the reason of comparability, exclude this control group. And then other European countries, most of them implemented a quota law over the period we examined. And at the end, when another suggestion would be to use French firms that had already 20% women at the start. But in fact, there were almost no firm, or very, very small sample of firms that already had the 20% women on board before the law. So at the end, we have two control groups. We use the US. US had no gender quota law over the period we examined. California introduced quota law, but for only over the period 2019-2022, because at the end they couldn't maintain the quota, which was illegal. We use them, the both structures are very similar to the French ones, and the argument that there's a cultural gap regarding ES issues seems to be less present during the period we examined, because after 2010, we have really a strong growth of SRI funds, for example, which is really similar to Europe. So for this US sample, we match firms by size, industry, and ES scores. The last point, so is probably important, but also leads to a form of over-selection of US firms, because on average, the ES scores were lower than French ES scores, so we had to over-select them to get similar ES scores. And then our second control group is composed of firms listed in Paris, but whose headquarters are located abroad. So, for example, Airbus is located, the headquarters are in Netherlands, but the main activity in France, or foreign firms that are cross-listed, that are listed in Paris and on other markets. So it's not a perfect control group, we totally agree, but well, it's the best we can do to have control groups. So when we look at the parallel trends, so we see that the parallel trends are okay for the period, so before the quota implementation, and we see that after quota implementation, we have an effect with both control groups. Then our data. So for ES data, we had also some issues because so we need coverage of French and control firms around 2010. But 2010 is a period where there were major restructuring in the ES rating industry. For example, Risk Metrics acquired KLD in 2009. MSCI also acquired other firms in 2010. And so we have really a temporary break in the data series because they really changed the sample they covered after 2010. And so we really couldn't use their data. We examined the data, we tried to use them, but it wasn't possible. So we used two different data sets, Vigeo Eiris, which is an agency that has a value-based approach. This rating agency was grounded by a union at the beginning. And so it's really a value-based approach. And we also use Asset4, so the data we have in Refinitiv, and which is a more pragmatic approach on financial materiality. So then we focus both on environmental and social dimensions. For the social dimensions, we recalculate a social score that is free from any diversity measure, of course, so that the board diversity doesn't impact the social score, and we use equally weighted ES scores. So for the boards, we use data that we have from Boardex, and for the rest, the usual sources. And our period is 2007 and until 2016. So of course, the board gender quota, and it was the objective of the law, led to an increase of female directors in France. And you see that it's a strong increase compared to our control groups. And the shock is really on the first, as I explained you, it's really on the first threshold, because the increase is rapid over the first period. So perhaps I can skip the summary statistics and go to our first result. So our first result is on the ES scores. And what we find is that we have a strong effect on ES scores, both environmental scores and social scores, after the implementation of the quota law. So the effect is really strong. We use so either ASSET4 or VGO data, and the control groups are either US matched or headquarter abroad sample, and the effects are strong for both control, for both data set, for environmental score and social scores. So then our second question is about critical mass. We know from papers in sociology that when you just include one woman, sorry for the, then it's tokenism. Means this woman will not have really an impact on decisions. You have just a woman because you need a woman. So all this literature shows that you need a significant number of women on board to really have an impact on the decisions. And so Quentin, for example, one of the first paper on these questions, said that the significant threshold is 15% of women. Under this threshold, you have tokenism. Over, you may find some impact, or more than 2 women. So that's what we do in these figures, dynamic treatment effects before and after the company reaches a certain threshold. So you can see that when you just introduce one woman, you have less than 50% of women who don't have a significant effect. However, when you have more than 15% women on board, you have a positive effect on ES scores. So these results convince us that critical mass is really an important determinant of the effect of women on board. And so we have also similar results when we look at the first woman, the second woman, the third woman, and you see that when you just look at the entry without looking at the exit, we have an impact from the third woman only, but when we look at the entry minus exit, then we have an impact from the second woman, or above 15%, as we had in the figures. So then the other questions are about board structure. We look especially at ES committees. So ES committees have several names that may change from one company to another, but when you have mention of sustainability, environmental or social ethics, safety, health, all these committees, we classify them as ES committees. And so we look at the likelihood of ES committees. When we look at first at the percentage of firms with ES committees, so the French firms is in red here, you can see that after the quota implementation, we have a strong increase of the number of ES committees in France. Here you have the US committee, and here you have the committees in matched US. As I told you before, you have more ES committees because we have an over-selection of the US due to ES matching. And also when you look at the female directors sitting on the different committees, you can see that the proportion of women is increasing on all these committees, but especially so on the ES committee. You have an increase of female on these committees. So when we look at the regressions here, the ES committee, you can see that the effect is positive and significant with all our controls and our data sample. We have a strong effect of post-quota for French firms compared to the control group and for the presence of ES committees. When we look at the impact on the women on these committees, you can see that we have a positive effect of the quota on the fact that we have more chairwomen of ES committees. And for the membership, we have a strong effect on ES committees, but also on audit committees and on compensation committees. So can conclude that after quotas, women are not only more numerous, but they're also more powerful. They are powerful in ES committees, but they are also powerful in the main committees, audit and compensation committees. And so are committees the presence on committees the only channel? At least ES committees are not the only channel, because even without ES committees, you have an impact of the quota implementation on ES scores. So you don't need to have an ES committee to have an improvement in your ES scores. It's not linked to ES committees, it's linked to the board in general, and also to the presence of more women in audit and compensation committees. So that's for the first result. So impact on both structure, more power in the board overall and in the main committees. And the second channel is that women have more ES experience. We use two measures. One measure, it is the director's experience in all positions related to ES issues. So if they have been sustainability manager, human resource managers, prior experience on ES committees, and also the length of this ES experience. So before and after quota, women have more experience. So you can see here the difference is significant. They have even more experience after quota, and the length of the experience is longer before and after. And you can see that in some way, after quota, the firm could have also hired more ES-oriented men, but they didn't. The ES experience of men before and after quota is similar, and the length of experience too. So after quota, they hired women because they had to hire women, and these women are before and after quota more ES-oriented. So they bring skills, ES skills, to the board that were not present, absent women. So we have these results also in our regression analysis, controlling for year fixed effect and firm fixed effect. We have more ES experience and for a longer period for women directors. And overall, we have more ES skills in the board. So previous ES experience on ES committees, membership on ES chair, and we have more ES experience on ES committees. So the last, our last test is to look at the overall, experience, ES experience on boards. So we have, after quota, more ES experience, so on average on the board, and even more so within the main committees. So the effect is nearly twice as much in the main committees compared to the overall board. So we have more power, more ES experience in the main committees, more power for the female directors. They are more present in these committees, and so we have more ES experience in these committees. And when we look in more details on the ES experience before the quota in the boards, so we can see that our effect is stronger and especially present in the boards with low ES experience before the implementation of the quota. So we did a lot of robustness tests. We tried, as I explained, alternative control sample. We tried balanced sample pre and post quota. We couldn't extend the sample ahead of the 3 years because of the availability of ES data. We checked that there were no changes to the board structure because, of course, at that time, supervisory board were concerned by the quota law, but not management boards. But there were no change during the period we examined. We had also, we replicated all the results on the French sample only, and the results are robust. So we are quite confident that our results are robust. So to sum up, after the introduction of the quota, we have more environmental and social performance. Women on board have a positive impact, all the more so as they cross the critical mass in the board. And so the channels that explain the results is first committees. They have more ES committees, but more so, they are more likely to sit on the main committees, audit committees and compensation committee. And why is it important? Because on the audit committees, you have also to examine the annual report and in annual disclosure report, where you have also ES information. So audit committee is really important. And so for the past experience, women have more from ES skills, and the board becomes more ES oriented after the quota. And that's it. Thank you.
Thank you very much, Edith. Thank you very much. Very nice presentation, very clear. Questions from the audience? Oh, I start with one. I would have a few questions, actually. What I was thinking when you're presenting is that clearly there's positive gains of, I don't know what you showed, there's positive gains of having more women on board. You know, it's strange when we teach corporate finance, we tell our students, you know, that managers, they maximize the value of the firm for shareholders. So they would do everything to maximize the value of the firm for shareholders. And clearly, this is not the case when it comes to representation of women on the board. If that was true, if that would bring positive value, you think naturally you would observe this. Of course, there's constraint, you know, that to do that. I mean, I understand this, but then the question is, now that they've set a quota and you've shown that it has a positive impact, will naturally this percentage increase above 40%? Because you think you can continue hiring more women on board, and maybe that's going to have more positive impact. Do we observe naturally that, once that they've shown with a quota that it works, will firms naturally continue?
There's several questions in one question. Because the first question is about firm value. And so, of course, you have the impact through the ES performance if you believe that ES performance increase also firm value. So that's a first channel. And so the second question is about diversity. So, the law doesn't say you need women on board. You need 40% of each gender at least. So diversity means that you need both female and male. So we start from a situation where you have few women, and then we examine the effect. But for sure, if you have 100% women, you may have a negative impact on value. So I think that it's about balanced boards and diversity. And the other point, why won't firm, once they understand that women may have a positive impact on firm value, why don't they do it naturally? Why didn't they hire women before 2011? In fact, most firms thought that it was impossible to find women to be directors. And at the beginning, at the data implementation, the first years, when you asked people, the CEOs were really puzzled and didn't know where they could find these women. At the end, it was very easy, and there were a lot of skilled women to fill the positions.
The law changed the dynamics.
Yeah.
Okay. I was also wondering, when the law was introduced to change your board, you could think of it in two ways. Either you increase the number of seats on the board and you fill them with women, or you recompose the board. It's a 1-for-1 change for men and women. How was it done in general? Do you know?
What we checked is that, for example, one way would have been to reduce the size of the board, and then for a given number of you have a higher proportion. It wasn't the case. Okay. Usually they just replaced old men with young women, in fact.
Okay. Okay, they got younger.
And the board, and that's really clear in the statistics. The board, over the average age of the directors.
That's going to change the decision process.
and probably, in several cases, it was good for everyone, because sometimes you don't know how to get rid of old directors. I'm getting
concerned now.
then you have a very good reason, the law. We have to hire women.
I agree. Other questions from the audience?
Then I ask a question.
Yeah.
So I was wondering, in terms of different skills beyond the ES, whether those women are different. Now, you mentioned age. Is there any other dimension? Maybe they have a PhD or are better educated or a different education. So that's what brings, the value, not just,
Yeah.
ESG is on the many channels, basically, what I'm saying. Yeah.
What we found is, for example, they have a smaller network on average when you compare male directors and female directors, and and also when you look at the specificities of the French situation, they are less often graduated from grande école, especially engineer schools. So that's a main difference, especially around the quota implementation, because in fact, before 2010, probably more than today, the directors were very often graduates from these schools. They were Polytechnique, Mines, ENA too, which is not an engineer, but it's really male-oriented too. So you have more diversity in the degrees. Yeah.
And so I guess the value added can sorry,
but not lower. I mean, they are skilled, but with other degrees.
So maybe one of the messages, not only diversity on the gender side, but also diversity in terms of skills that can, add value to the board. Yeah.
Yeah, probably it's just yeah, and also diversity. They also, but then we control for other characteristics. But for example, firms also hired foreign women, so that you have two characteristics, interesting characteristics in one.
Which is interesting, but complicates the puzzle of your study. Yeah, so that's
but we control for direct characteristics in our regression, so it shouldn't have any impact. It's really about women.
Questions?
I just have one. Yes, just one. So you say that there is an increase, but how big is this increase in economic and social performance?
So it's really significant, but because it represents on average more than 10% of ES ratings. So of course, then we have the question of Jocelyn, the impact on value. We didn't measure the impact on value, but on the ES scores, it's really significant. 10%, around 10%.
Because the impact on value could also come from the fact that board diversity matters for monitoring, right? So that's more standard in corporate governance, that different profiles and independence, right, matters in terms of value.
Yeah, sure. Yeah, for sure. Yeah, the women who are hired are also more independent. Yeah, that's also the case. But we control for that in the regressions for independence. So,
there's a question from Christine. Go ahead.
Well, I guess you will not be able to answer to that question with your sample period, but I think it might be interesting to look what's happening after the quota. Because when the quota was adopted, they had to hire women right away, right? And it was more likely that women will have ES experience, because just historically, it's more likely for women to go in and work in those companies or in those positions. So as you showed, they had more ES experience, and that was also probably bringing to better results. But it's interesting to see after some years when there's more diversity in terms of the skills, like who the companies are hiring, if they have more maybe finance experience or other type of experience, and how it's affecting the ES results.
Yeah, for sure. So that's another paper, but I think it's interesting. And even for ES experience, because now the industry becomes so large that in fact, more and more men acquire this kind of experience. So probably, if you do this kind of research today, I'm not sure we would find exactly the same results. I don't know, but I'm not convinced that we have still such a difference in ES skills between male and female. But that's for next research.
You'll be re-invited for a new paper eventually. Okay, other questions? Perfect. Then I thank very much Alberta and Edith for their presentation. I thank everyone for attending. As usual, great attendance, great presentation. So I'm very happy to see that everyone is here again. Our next webinar is going to be around end of November. We haven't fixed the date. We're still identifying the exact topic, but you'll be informed very quickly on it. And we'll get back to you. So again, thanks everyone for a great webinar, and hope to see you again. Thank you very much.
Thank you. Thank you, Jocelyn. Thank you, Sophia.
Take care.
Bye.